Hello, this is Chuck Carnevale. I'm the Chuck in the Markets Up Chuck. And last night I had the pleasure to watch a interview of Bill Gates and Warren Buffett at the Columbia University. They were interviewed by a lot of the students at the School of Business. And of course, it was very fascinating to hear these gentlemen talk about America and their faith in America and how much they believed in the country and how much they believed in the future. You know, with all the doom and gloom that we being fed by the media, it was kind of nice to see that. But I thought it'd be fun then, as a result, to look at how Bill Gates and Microsoft became the two of the richest people in the world, as well as in our country. Of course, Bill did it by starting Microsoft. And Microsoft's really a very interesting company. Now, I took dividends off of here because they paid a special dividend that distorts the picture. So I just want you to look at it strictly from the standpoint of capital appreciation. Back in 1991, they earned 5 cents a share, and then you can see that their earnings grew dramatically all the way through 2000. They did kind of have a little issue in the recession. This was during the irrational exuberant period where the stock price got ridiculously overvalued. You can see that, earnings, obviously determine market price, and the stock price eventually came back into earnings. And then we had some, pretty good years, but Microsoft, like, all companies, got hurt pretty bad by the recession versus stock price, but yet their earnings actually held up pretty well. They've averaged 22.8% compound, and the company has very little debt in the balance sheet. And the beauty of it is, if you'd have put $100,000 in Microsoft on this day and held it to this day, and of course Bill Gates, had a lot more than that in it, obviously, $100,000 in Microsoft would have grown to $2,823,081.44. That's a 19.4% compounded rate of return over that period. Now, Microsoft also paid some dividends that I didn't show on the previous chart, but that's in virtue of a stock market that only did 6.5%, returned 100,000 to 329,000. So, obviously Bill Gates did very well by, starting this company and owning certainly the majority of it, but it was the earnings of the company and how well the company did over time that made Bill Gates so rich. Now, Bill is richer than Warren Buffett, actually, and this next chart will show you why he's richer than Warren Buffett. Warren Buffett had a pretty successful company too, called Berkshire, but there's a lot of lore around Warren Buffett and so on. I think looking at the facts of Berkshire really kind of paint, I think, a more clear picture. You can see that Berkshire did extremely well. Earnings, went from, in this case, of course, with these huge price tags here, from $384 a share up into $6,000 a share currently. But I do want you to know, just look at it from the standpoint of the picture. We had kind of decent earnings growth here and a good spike here, and of course the stock price did real well. Then there was a period where Berkshire really didn't do that well on an earnings per share basis, and Berkshire's stock price didn't do so well either. It actually was pretty flat from 1998 all the way through 2003. It peaked out at $78,000 in June of 1998, and it was at $63,000 by March of 2003. So there wasn't a lot of growth in earnings, there wasn't a lot of growth in Warren Buffett's wealth, but then we had a nice little surge here again going up through calendar year 2007 until Berkshire did have a poor year. But I want you to notice that at the end of the day, the growth rate of earnings of Berkshire was 15.5%, and had you put $100,000 in Berkshire, back on the first day of this chart and held it to the last day of this chart, that $100,000 would have grown to $1,530,000. That's a 15.5%, compounded rate of return. And again, that compares to the stock market that did 6.5%. Now, of course, both Bill Gates and Berkshire and Warren Buffett had a lot more than $100,000 invested in these companies. That's why they're billionaires. But the bottom line is, I thought having this perspective and seeing this from the perspective of how the business has actually generated the wealth, I hope you found it as interesting as I did showing it to you. This is Chuck Carnevale saying thanks for listening. As usual, this is Friday. I won't be blogging over the weekend, but I expect to talk to you again on Monday. Y'all have a great weekend, and talk to you soon. Thanks.